Hey Reluctant Preppers, this is showing you just how easy it is to purchase silver without paying any premium over spot price. You just go to sdbullion.com/rp, scroll down and enter the special code to get silver without any premium, and they'll mail it to your mailbox, discreetly packaged. Inside you'll find a beautiful 10-ounce bar of fine silver, and you are able to purchase that and have it and add it to your stack and your collection without paying any premium. And you're supporting Reluctant Preppers along the way. Thanks.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. It's always great to have you here, and we're glad you're joining us. Today we have a familiar guest with us. He's world-renowned silver guru David Morgan, founder of thesilverinvestor.com and themorganreport.com. David, thank you once again for joining us on Reluctant Preppers.
Oh, Donegan, thanks for having me.
We've been chasing what seems to be a groundbreaking story for a couple months now about Chinese government moving away from the US Petro Dollar and announcing that they're going to trade oil, that their oil is only going to be for sale in these gold-backed Yuan denominated oil futures contracts. And this has been reported both on our channel and elsewhere as being a clear indicator of the world's pivot away from the US dollar and the petrodollar, and the world rejecting the US dollar because of various factors, including the abuse of the dilution of the dollar through easy money policies and all sorts of things like that, and just abusive over-reliance on the dominance of the dollar and unfairness that it's placed on other countries than the U.S. Over the last several decades. But I understand you have a different take on that, and want to give us a chance to hear your perspective on whether, in fact, these Chinese oil contracts are, in fact, backed by gold, because that's something that you speak of often, is whether or not instruments are, in fact, backed by true precious metals. So could you set the record straight for us on that?
Certainly, and this will be, I can be long-winded. I'll try to be succinct. So it all started with the Nikkei Asian Review article, and this is going back a few months, and I forget the exact title, but it basically implied, game changer, renminbi or yuan-backed gold contract, or oil-backed, oil contract backed by gold. That was the essence of the headline. And when I first read it, I got very excited, like most people that are, pro-gold. And yet, even the first reading, I had some hesitation, because I know that the Chinese don't export any of their gold. All the gold that China has internal, in other words, all 100% of the gold mining that takes place on Chinese ground stays in China. And there isn't much export of Chinese gold at all. And so something was kind of gnawing at me, but I went with most of the gold people, and I did a podcast. So I do a podcast every week called The Weekly Perspective, and I do it in about 10 minutes. I try to cut it off at 10 minutes. I look at like 4 or 5 really important headlines in the global economy, and I give the sources. Sometimes they're very notable, like Bloomberg or Reuters, and sometimes they're financial analysts like myself, like Wolf Richter, who does a very good job, Charles Hugh Smith, and others. And then I always end up with speaking about the precious metals, usually gold and silver, and sometimes gold only. On this particular week, I took the whole 10 minutes and explained the history of gold and oil, and how this yuan gold contract would absolutely be instrumental in being a true game changer. However, I still continued to do research, and I discovered that Kuz Jansen, who I'm fairly close to, and Lewis of Smalls Gold, SMALGLD, I think it's spelled, both questioned the authenticity of this Nikkei Asian Review article and discovered that the author had not contacted anyone at all whatsoever in China about any of this. He basically just wrote it off the cuff. But a lot of people, myself included, jumped on it and started quoting this source, and then it just compounded. So basically it's a rumor that caught fire, and the fire is very difficult to put out. So I maintained trying to be as objective as possible. So the next week, I did pretty much a retraction on my podcast and said, look, I got a little excited, jumped the gun. I've done some further research. I spoke with Rory Hall at the Daily Coin. He gave me information from Coos and Lewis, and I talked to Lewis. I wasn't able to get a hold of Coos on the phone. He's and I are in pretty different time zones, but regardless, I did write them both, and I verified that basically this is not the case. So more people were writing about it. And so I discreetly contacted a few of these other people and said, we need more discovery on this. So one of those people happened to be Alistair McLeod of Gold Money, who writes for Gold Money. And he was going to basically set the record straight. And he did an interview with, again, Rory Hall of the Daily Coin. And basically went through everything. And what was determined from Alistair is that there are two separate contracts, and there is no direct link, direct tie, backing whatsoever at all. So the facts are that the proposed oil futures contract that is settled in Yuan is going to happen, but there is no direct tie to gold. So there was a follow-up podcast that was done by Small Gold that you can get, and both of those are on my website. So, the front page of the Morgan Report is to get, on our free email list. I fully admit that. That's one of our marketing. That's really the only way we market. We don't have deep pockets like some of these other newsletter outfits. So if you go to the website, there's more than just sign up for the free newsletter. If you scroll at the top, there is a blog. And if you go into the blog and pull down the blog menu, you will see both the Alistair McLeod interview and the Small Gold interview for free. And you can listen to them both. Since then, there's been a couple of articles that have been, let's say, more in-depth about the reality of this not being truly gold-backed whatsoever. And then I noticed that, a good friend of mine, Mike Maloney, just put out something today. It might have been yesterday, but I only caught it today. Basically rehashing, this gold-backed oil contract is going to be a game changer. So Mike doesn't have it exactly. It isn't, the idea isn't that it's gold-backed. It is not. The idea is that you could buy oil using yuan. Okay, that's going to happen, or certainly looks like it's going to take place. But then you have to go back into the futures market and use that proceeds to speculate on the gold price outside of into another market. So hopefully I'm being clear. I don't want to belabor any further. I think the best information is to hear it for yourself, and that would be go to the Morgan Report, get on the blog, listen to the interview with Rory Hall and Alistair McLeod. That one's about, I forget, it's pretty long. And then there's one that's the day after that's Small Gold going through the whole thing. And basically, Lewis makes a good point. If I buy advertising space from you on your podcast, Dunnigan, and you send me, and I send you $1,000, and you take that $1,000 and you buy gold with that $1,000, does that make the U.S. dollar gold backed? No. That's basically as simple as I can state it. If you wish to convert a futures contract in Yuan into gold. Certainly have the option, but there's no direct tie in any way, shape, or form. So I think I've beat that to death.
That is important, though, because that's the way it's being presented.
It is, yeah. And again, I made a mistake. But, when I'm wrong, I promptly admit it. And I found out I was wrong. And even after admitting that I'm wrong, it took a bit of persuasion to, and I was like saying I'm wrong. I'm pretty certain I'm wrong. But if I'm missing something, please enlighten me. And again, I'm taking more time here. But, Alistair kind of jumped on it and said, well, he didn't say me specifically, but the gold community doesn't really understand how this really works. And that's fine. And that's when Rory set up the interview. So again, everything I said is as factual as it stands today, and you can make up your own mind. But the truth is, it is not backed by gold.
If we could turn our attention to money flows that are dominating the bond market, the stock market, and the precious metals, we've had Gregory Mannarino and others on our channel that have talked about, if you really want to understand, because people have been asking, and I remember when you were the keynote speaker at the Liberty Mastermind Symposium in Dallas, Texas, and Bill Murphy from GATA.org asked the question. He said, how did we get it so wrong when people thought that the run-up, the spike in price that happened in 2011 was going to be the big physical market overtaking and breaking the paper market, ending the manipulation, and free market forces were going to take over. Price discovery was going to start happening. The sentiment of the people was paying attention to precious metals, and then it just got beaten down since then for the past 6 years, and part of that discussion was around where the money is flowing. And when in the world the low prices of when in the world capital is going to start flowing back into the physical precious metals market, Gregory Mannarino has said, if you want to see in advance where the money is going to be flowing, keep your eyes on the 10-year U.S. Treasury bond. Look at the yield of that bond, and when it's rising, that's when money is flowing out of the bond market and seeking other better to be treated better elsewhere, and everybody's dumping their bonds, and it's going to be flowing into the stock market, and it's going to be looking for other places to go. But that he foresees, at least his view is that we're still seeing a protracted period here where we're going to be getting an opportunity to accumulate precious metals on bargain basement sale prices. But could you give us your view of, because you watch the markets and have for decades, what your view is of the relationship between the 10-year U.S. Treasury bond and the money flows in and out of that, and what that tells us about where that money is going to be going into the either stocks or precious metals?
Well, first of all, from a very top view, I mean, as I've said for years, it's in the Silver Manifesto, a whole chapter dedicated to it. I mean, everything hinges on the bond market or the debt markets. The whole problem, as we all know, anyone that's looked at this venue of honest money or gold and silver or precious metals or mining shares pretty much is aware of the fact that there is a debt problem, and you cannot solve the debt problem with increasing the debt. And that's all that's taken place since 2008, when we had what's called by the mainstream a financial crisis. So that's the big picture. If you want to know more about the big picture, you can get the Silver Manifesto and read the chapter of the debt bomb, or there's a lot of free stuff on the internet. I don't care. Do what you want. Now, the flows, I agree with Mannarino that as interest rates go higher, bond prices go lower, which means that people are losing money that are owning those bonds, and they're going to seek somewhere else or a higher yield to go. So basically, I agree with Greg. If you go a step further, and this is just to prove my age, there used to be what's called the TED spread. Hardly anyone talks about it anymore, but it was a 10-year Treasury basis against the euro dollar. And it was basically a safety factor. And the safety was that you were safer in the U.S. Treasury than you were in the euro dollar yield. So you could get a higher yield with the euro dollar deposit than you could get with the 10-year Treasury. But when people got scared, they went to what they felt was the safest. The biggest conundrum of the bond market is safety. Everyone still, I shouldn't say everyone, but almost everyone still believes that the safest thing you can do is own debt of the United States, be it the long bond 30-year, be it the 10-year Treasury, be it a note, be it a T-bill. Anything that the U.S. Treasury puts out is safe. And this is absolutely 100% completely false. There's nothing more risky in the world than something that can't be paid back. And there's absolutely no way in any way, shape, or form that any of this debt can be paid back at par. And that's absolutely provable throughout the euro markets and other bond markets where they guarantee to pay you back less than you put in. Guarantee to pay back less. And people do it. I mean, this is the insanity of the current financial system. Coming back to the U.S. debt markets, they still pay a positive yield. And this is one reason I think that you're going to maintain positive yields, is because too many suckers are getting out of U.S. debt markets, meaning the Chinese, for an example. Yes, they own a great deal of debt, but it's about one-third of what it's two-thirds of what they used to own. In other words, they've offed about a third of their holdings over the last 3 or 4 years. And now we're in a situation where we're just adding to the debt, pretending everything's okay, pretending it's the safest place you can be, and that whole game continues. And it's a huge market. I mean, it is huge. And yet, if you have huge money or huge debt, as all these nation states do, you really can't go in the gold market. I mean, not in size. You could, in other words, go in with, $1 trillion and buy gold. You just drive the price insane. So when you are buying it, as the Chinese have been for quite some time, you have to act kind of quietly and buy relatively a little at a time relative to what your currency holdings might be, your foreign exchange holdings might be. So I answered a larger question than you asked, but does the 10-year Treasury give you a heads up on where the money flows are? And the answer is yes. I agree with Greg somewhat, but what I wanted to add, and obviously I did, is that it's very imperative for people to understand the Orwellian world that we're living in. What you perceive to be safe, the U.S. Treasury debt markets, are probably about as unsafe as you can get. And what you perceive to be risky, that gold market that hasn't gone anywhere for several years as being risky, is probably as safe as you can be. Because you got to ask yourself a very simple common sense question, and that is, how long have currencies lasted before they failed? And how long has gold lasted before it's failed? The answer to the second question is gold has never failed. Now, the price varies, and I know that, and so does everyone else. But really, gold is a specific amount of a metal, and that doesn't change. What changes is what its relative price is relative to the currency that you're betting with at the time. In other words, gold can be going up in terms of euro, but down in terms of U.S. dollars. So gold has never failed. All currencies to date have. The U.S. dollar, by the admission, the Federal Reserve is worth about 3 cents of what it was in 1913. It's lost 97 cents on the dollar so far. And so now we're worried about, is that last, 50% going to take place slowly or quickly? Is it going to go slowly where you can adjust to it and gold will just edge up slightly over time? Or is it going to happen rapidly where you see this big run to gold, which I think will happen over the next probably 3, 4, 5 years at the most. I don't think this thing can go on 5 more years.
You mentioned about the opposite of people's expectation of where the flight to safety is. In the light of that, the IMF warned this week that 9 major banks are in trouble. They're not going to make their profits, and in fact, if they had like a 3% setback in their investments, they'd be underwater, that kind of thing. Is this announcement from the IMF about these 9 major banks, and these are like headliner banks, these are all too big to fail, is that the start of the meltdown that so many people have been anticipating for so long? Is that an early warning sign?
It is. In fact, it's interesting to bring that up. That was one of the articles that I talked about on my podcast. And the podcast is the Morgan Report on iTunes. I don't know how you find it on Android, but I'm sure if you know anything more about technology than me, you can find it on an Android system as well. But no, that's very, very good that you point that out. And yes, it is these things are not magical that come out and people say, oh, no one ever told us. The mainstream usually does signal it, as you just indicated. And like the housing crisis of 2007, I wrote just a couple articles. That was before I just started restricting myself to basically verbal interviews or, stuff I could do on the internet, audio or video wise. I don't write much in the public domain anymore, just for our paid members. But regardless, I did an article on the real estate collapse about, 6 to 9 months before it actually happened. And it was for free. And I got a very, very complimentary letter back from a large real estate investor about how much I'd saved him. And he wasn't seeing this in the mainstream and on and on. But, and I digress, but I just digress to make the point that, there isn't a big amount of truthfulness coming out of the mainstream because they have to keep these debt markets going. They don't want them to collapse. Nobody does. I'm not rooting for the debt market to collapse, but I'm smart enough to know they always have in the past, and this one's going to. And because of that, I'm prepared for it, at least, not only financially, but mentally prepared for it, because it's going to be a huge shift in financial consciousness when this thing unravels further. It's unraveling, but it will unravel even further. And to the point where a lot of the naysayers that say, tomorrow is always going to be like today, are going to have to eat their words, because they're going to wake up to tomorrow that's very, very vastly different than it was the day before. And that's just a metaphor, because in some places it probably will not be that big a change, but in many places it will.
And speaking of the Morgan Report, if you could give us just a few of the key revelations from the past few issues of the Morgan Report, just to give our listeners a sampling of the kinds of topics that you delve into there.
Sure. Well, we do, the macro picture. I write the editorial, and I have a staff of 2 more people. Chris does most of the equity analysis, and David does most of the mining trips on all the junior spaces that we talk about, all the speculative ones that are the hardest to analyze. We usually have our feet on the ground before we put a word to paper. On that, this Nova Resources has been like the hot hand. I think the thing's gone up about 10-fold. And it appears to be very, very good. I don't own it. David Smith does. David's written about it, I think, in another publication. But I'm thinking of writing an article about what's better than Novo Gold. And the reason I'm saying this verbally is because we have a speculation that is the forerunner in electronic waste. And this company is making great strides already, and one of a major Fortune 500 company has basically teamed up with this small company, a small cap stock, to basically fund it as required to not only make a larger pilot plant. There's already one in that I've actually inspected with David Smith and went through the whole thing. But this is a new way to mine gold in a way. I mean, recycling's been around for a long time, but this electronic recycling is becoming a bigger and bigger part of the industry all the time. For example, smartphones yield about 4 grams of gold per ton, but some of these other parts of the computer, the motherboards and what are called RAM fingers and others, are astronomically lucrative as far as what the melt value on these components that these high-tech items are. And this company thinks that over time it could be somewhere in like the 10th, in the top 10 gold miners in the world, without ever turning one spade of dirt in the ground whatsoever at all. I mean, that's kind of amazing when you think about it, that there's that much electronic waste in this company that has this reagent that is going to be a cyanide replacement that leaches out precious metals, and you recycle the reagent over and over. Of course, you always lose some in the process, but it's environmentally friendly. And you basically get people that turn in their smartphones and other items, of course, and you get this huge yield of precious metals out of it. And you've never, ever had to stake a claim pay a lease payment, go through government regulations in a certain jurisdiction because they don't match your own, and all that goes on in the mining industry. It's a pretty slick way, and we're taking advantage of it. And I don't know if anyone else in the industry has even talked about this company. I'm sure when some of the very large newsletter facilities are aware of this story, they will tout it as they discovered it, it's brand new, it's their own, and on and on. But by the time that happens, I think we'll already have probably a 5 or 6 fold on this stock. And once those types get a hold of it and really pump it, the gains could be quite substantial.
So that's one that I had observed in the Morgan report as well. And any other tidbits from recent articles that come to mind that can whet the appetite of our viewers?
Well, to be a lot more conservative than that, because we do a lot more on the speculative side, as you know, and I've always taught people to just bet money you can afford to lose on the speculations. Most gold newsletters just concentrate on the speculative side, and believe me, it's a very difficult sector to do well because there's so many unknowns and there's so much fraud in the industry. But, I've always maintained a Morgan report from the very first article to this, to maintain big money in big companies that have good balance sheets, good management, and bottom line that you can take to the bank. In other words, solid companies. I mean, for example, you look at Royal Gold. I mean, we're still up 600% on that stock. And this is in a gold market that's been pretty flat for 5 years. We're up, 6-fold on that company. And there's several in the top tier that are like that. But on the mid-tier, we took Trevally Resources. And that was knowing from Chris's work that zinc was going to be in short supply. And we wrote that before any bank analyst figured it out. And we do have a lot of hedge fund types that do take our reports, not to mention, let's say, some at the higher level as far as being serious about these markets. But regardless of that, so that stock hit an all-time high recently. And I did a video update that I do for our premium members. And I basically said, look, we're hitting new highs, so the chances of it going higher are pretty good. There's nothing more bullish than a new high until it peters out. So put in a stop here, and I showed where I would put a stop in on that stock. But it's nice to have one in your portfolio that's hitting new highs, and being early on it, that kind of thing. So that's a mid-tier that we still like, and I still own it. Full disclosure. But, I don't want to talk about too many more. But I think the main point I want to make, and thanks for giving me the opportunity, is the Morgan report does all resources. We just don't look at silver and gold, although that's our main focus. But we look at, vanadium, iridium, cobalt. We did the rare earth elements before anyone else. Even before the original rare earth element bug did it, we were 6, 7, 8 months ahead of him. The energy metals, we did a special white paper on the energy metals, did a special white paper on palladium versus platinum. We were right on that. So there's a lot that we do that are minerals related. And, if you want to know how to invest in platinum, you want to know how to invest in cobalt, you want to know how to invest in lithium, you want to know how to invest in, XYZ mineral, the Morgan report's a good place to start. And honestly, there's really 1 or 2 lithium companies that are worth investing in, maybe 1 or 2 cobalt companies worth investing in, only a few of these other rare earth element type stocks that are worth investing in. And there's literally at times when the markets are hot, hundreds of these companies that come out with, the hot mineral de jour in their title, XYZ mineral, blank, blank, blank. I mean, and these things are something that you really have to be educated about, or you can learn the hard way. Not to say that these stocks don't move up and down. All stocks move up and down. But if you really are a serious investor, you need to be able to separate the wheat from the chaff, the talk and the hype from the reality. And that's what we do. Do we get it right 100% of the time? The answer is no. We get it right almost 100% of the time in the top tier and probably 80% or so on the mid-tier. And on our speculative side, we probably do better than average. But that, again, is a very, very difficult sector. But I'm more honest than most. I am saying, only bet money can afford to lose. And if you are going to speculate in our speculative section, and that's all you buy the Morgan report for, read the how to use the Morgan report, and that will save you a lot of heartache, because you don't want to get the stock I just mentioned with the reagent and all that, and that's the only one you buy, or you put too much money into that one. You would want to take at least 3, 4, or 5. I prefer 5 out of the list of 10 to diversify with equal dollar amounts. You want to stay safe. And then, of course, Marin Katusa took liberty with this. It's been around for years. I'm not going to take credit for it, but it's what's called a free trade. One of these speculative stocks, or even a mid-tier, and even if you're a top tier, if you're so inclined, doubles, but particularly on the speculative side, if a stock doubles, you're really smart to sell half of it, get your original capital back, and ride the rest for free. And that gives you your capital back where you can take that risk money and you can put it in another junior speculation if you wish. And basically, still your money, but the risk is a lot lower because you've already capitalized on the first one. So enough said, long pitch, but, I still love what I do. I'm still passionate about what I do. I still want to see people. There's a lot of leverage in these mining stocks. I mean, if you want to catch the people that bought silver at $5 and the people who buy gold at under 300, the way to catch up is buy these miners when no one wants them, and that's now. No one really cares about the sector at all.
Well, David, you've given us a lot to think about, and all the way from gold-backed Chinese oil contracts to market capital rotations between bonds and stocks and gold, the IMF warning, and some key revelations from your Morgan report. Before we let you go, anything mindset-wise? We've often tapped your brain on the philosophy or the attitude, the mindset of someone who faces preparedness. Anything that comes to mind from you that you want to leave? Oh, wait, before I can let you go on that one, go ahead. You can answer that one, and then I have one quick follow-up one with you.
Well, I don't have any real words of wisdom today. Sometimes I do get a little twang in my heart and give some, what I hopefully say something that helps somebody somewhere. Being grounded and being realistic. For an example, I'll talk on a mining thing. There was a well-known publisher that has, probably 500,000 on their free list that was talking about this particular company and it being a 10-bagger and all the merits of this company. This is a very good company, and the ad copy was extremely strong, but it was a good company. And I had many of our members, our paid members, email me. A few have the ability to get through on the phone, and they were actually questioning me that I had missed this really important this situation. I laughed because we have had that stock on our portfolio as a near-term producer for quite some time, like 3 or 4 years. And yet this big outfit was promoting as a 10-bagger. The thing that I don't like is that, one, it's $1 billion market cap. It is not a 10-bagger. This is not a $10 billion company. We think it is very undervalued or we wouldn't be holding the stock. Stock could probably double. In fact, the stock, if anyone knows these stocks, it went up 20% in one day. So that right there will tell you what stock it is if you follow the stocks closely. I had lunch with the CEO when he started the company. You can't get much closer than that. But I don't want to make this too much about me, but I do want to make people realize that you don't have to have a big publishing house behind you to be, good at what you do. You don't have to be in the limelight to be I earned my stripes, so to speak. So, again, I don't want to make it too much about me. But anyway, I had lunch with them. So I told our readers, look, you already own it. You own it at a lower price than it is today, being advertised by this publication. And I think the stock will be bought out by a major with probably a 30% premium, but that's probably a couple years off. So, everyone kind of relaxed, but it was kind of an annoyance to me because this is kind of thing that goes on in the industry that if you knew any reality, and this is where I come back to my words of wisdom, stay grounded, be real, get real, buy real, and be realistic on these investments. Some of these little juniors do go up 10-fold, 20-fold, 30-fold. And I do think that will happen again at the end of the cycle. But when that's taking place, you want to be extremely careful because that's when people like me will be telling our membership, take profits. And, of course, the big question for me, and it's going to be very difficult, is, well, what do I do with all these profits? If they're paper, what do I do? And, there'll be multiple answers. It'll be buy something that's reasonably low. It could be land. It could be real estate. It could be businesses. I don't know. And there isn't one direct, perfect answer for everything. But I did start the Morgan report because I wanted to carry people through the other side. My initial part when I started the Silver Investor, and the report was called the Silver Investor, and that was only for about the first year, was, I basically cash everybody out at the top and ho-hum, goodbye. I don't have anything else to write. And I thought it through very long ago, 18 years ago or whatever, and said, I want to be able to be on the other side when I'm calling a sell on a lot of these things and what to do with it. And again, I don't know at this point in time, but obviously you look for something that is of value, or in the case of where this economy could be going, it's what can you do to maximize those profits for the benefit of others? I mean, that's really going to be a question that a lot of people are going to have to look at if they have any heart at all or any philanthropic leanings, because it's not going to be the guy at the top of the mountain with the most gold is like the happiest person around. It's really going to be how you're going to rebuild what we are left with in a manner that's more ethical, honest, and sincere with everybody else. That's what's really going to come down to.
Words of wisdom and real meaning, because none of us came into this life with anything, and we're not going to leave with anything. So other than what we leave behind. And on that note, one question for you, our last one, and I'm asking this of all our guests recently, and that is, what is one thing that you have done, so one specific action you have done recently, perhaps, to be more prepared than you were before for potential upset?
Oh, boy, you are asking a question that's kind of one I was going to keep quiet, but I don't mind voicing it. I mean, it's really hard to hide out when you have the presence I have, which is not anything like some of these newsletter guys, but it's there. I mean, obviously. What I did very recently was I put my emergency panel, which is just the bare minimum electrical needs that I have to run, this country property, which means a well pump, and a freezer, basically, in my computer, on solar. And I just finished that up roughly 3 days ago. So,
hey, congratulations.
It was just too overpriced for me. I mean, I could afford it, but it was just too big a bite out of my wallet. And I finally found an outfit that has an EMP hardened solar situation, and I'll probably be doing an interview with them on my podcast. And the price was about a third of what had been quoted everywhere else. And, of course, I had to do the installation. But I said, yep, that fits my budget. I got it on a big pallet, and I put up the panels, laid the wiring, put in the inverter, hooked it up to the emergency panel I already had installed, and away I go. So I've got, like I said, the bare minimum. I mean, I'll belabor this a bit more, I could be talkative. But when I thought about it, initially it's, I'd run my house on solar or whatever, and people can, and it's their choice. But I thought, in a grid down situation, emergency situation, I'm not a TV watcher anyway. I hardly ever turn it on. But, I'm not going to be worried about every light in every bedroom. I'm not going to be worried about this and that. I'm going to be worried about, does my computer work so I can stay in touch with my people? Is my freezer still working? Is my refrigerator still working? And can I get water in this house when it's, minus 20 degrees outside? And that's what I'm worried about. Everything else is like a luxury to me. And so that's how I set it up.
I'm intrigued by the EMP protected innate, quality of that system, because we've had Dr. Arthur T. Bradley, who's not only a NASA electromagnetic scientist, on talking about EMPs, is also the author of the handbook for emergency preparedness, and he's the host of disasterprepare.com, and he talks a lot about ways to do shielding, that sort of thing, for EMP protection. So I'd be happy if you'd be willing to, share our contact info with that company, and we'd be happy to have them on our show as well, and get more information out there for our viewers. So thanks for that. Thanks for that awareness. Yeah.
Again, I always thought about it. I mean, my degree is aero engineering, not electrical. My dad was, but regardless. I always thought about it. I mean, I thought, what would happen in a, solar flare situation, or even a mini nuke or whatever, is it going to hold up? I mean, you go to all this expensive solar, and what one big solar flare hits you, and all of a sudden it's useless. Now what do you do? When you have your communications down and the solar factory isn't 3 miles away or something, how do you get a new inverter? So I'm glad I waited as long as I did, and I heard this interview off of another channel like yours or mine, and it made a lot of sense. And I went through through everything, got an electrician involved because, again, electrons are not my forte, and said, yeah, this is the way to go. If there is, a solar flare type of situation or EMP of some type, this thing will take it and keep on going. And that's what I want, especially when the price was actually less than what had been quoted in the past. So very happy with it. Yeah, I'll be happy to pass those contact details on to you.
Thank you. Well, David Morgan, founder and host of themorganreport.com. As always, thanks for joining us here on Reluctant Preppers. We certainly covered a wide variety of topics tonight, and just appreciate you visiting us here with us. And I'm sure that our guests, as always, are going to have a lot of comments to share about what they've learned or things that they want to comment on. So just appreciate, once again, you joining us on Reluctant Preppers.
You're welcome. Thank you.